This is Trepp with this special guest podcast, the CRE Outlook for 2021. I'm Martha Kocher with Trepp, a data modeling and analytics firm for the CMBS, commercial real estate, and CLO markets. I'm with Manus Clancy, Senior Managing Director, and Joe McBride, Head of CRE Finance. And joining us today are two leaders from Deloitte, John D'Angelo, Managing Director at Deloitte Consulting, and Kathy Feucht, Global Real Estate Sector Leader. John and Kathy, welcome.
Thanks, Martha.
Yeah, thank
Glad
you,
to be here.
In your roles, you both serve in the real estate sector, but from complementary perspectives. Give us a quick overview of your backgrounds.
Sure, I can start. Again, my name is Kathy Feucht. I lead our global real estate practice at Deloitte. I've been at Deloitte for over 18 years, and I've grown up in the audit function.
And I'm John D'Angelo, Managing Director. I'm responsible for the consulting practice to the real estate industry in the U.S. and have spent 30 years in the industry, mostly as a management consultant, in the last 3 years at Deloitte.
Your group, the financial services sector, published a CRE Outlook for 2021, which caught our eye and our attention. It was published back in December of 2020 and was the impetus for us to invite you and come talk about some of the findings. Explain some of the background of the report and your approach in collecting some of that information.
By way of background, we've been doing CRE Outlook for over 20 years. And this past year in the 2021 Outlook, we utilized a survey that we conducted globally across sectors. So owners, operators, investors, brokers all participated from around the globe. So we had respondents from Europe, North America, Asia Pacific. And we used those survey results, which was conducted in the summer of 2020, combined with some other research to put together our outlook. And we really focused our research in four areas, four functions of CRE organizations. That would be technology, finance, operations, and talent. And we really looked at a couple of things. We're viewing this pandemic really in three phases: a respond, recover, and then the thrive phases. So we assessed a little bit at where organizations were at in 2020, which was mostly in the respond and recover phase, but then also used the data and the survey results to look ahead to how organizations are going to come out of this pandemic and hopefully thrive going forward.
Kathy, could you just give me a heads up when we're right about to enter the thrive phase?
Sure.
Get my stock account, ready and start buying up some properties.
Yeah, it's a good question, and I wish I had the crystal ball, but as best as our economists can tell at this point, a lot of that recovery and how we exit this pandemic is going to depend on where we're at with medical advances. So there's a lot of optimism, I think, with where therapeutics have evolved, with the vaccination now rolling out here in the US and other parts of the world, with some of the advances in rapid testing. I think all of these are really positive signs. And I think we're hopeful here that maybe mid to later in 2021, we start to see some of that rebound. But it's really going to depend. It's going to depend on where you primarily are located and operate, and also what sector you're operating in. For example, this pandemic has had a very different impact if you're sitting in retail or hospitality sectors versus if you're in infrastructure or invested in data centers. And so the answer really does depend on how you feel about where the general economy is going and where the economy is at today in your sector.
So I was looking at the report a while ago, and a couple of things jumped out at me. Of course, the two big areas of concern over the last 9 or 10 months have been retail and hotel. Retail, of course, was a concern even before the pandemic. Hotel really wasn't. Hotel, other than some areas of overbuilding, was really kind of doing quite well, at least from the data that we see. Looking at your survey, there was an indication of, percentage of rental growth in the next 12 months for hotels. And it seemed like 60% or so were expecting positive growth over the next 12 months. Is that because they're expecting to come off like a super low from the last 9 or 10 months? Or is there something we're missing that there's more bullishness there than meets the eye.
Yeah, I think some of it is, 2020 is going to be a severely impacted year for the hospitality industry. So coming out of that and getting back to some of the optimism with getting back to travel, particularly in the leisure sector, I think with vaccination rollouts and medical advances, you'll start to see some of that start to come back, albeit that comeback I don't think is expected to be anywhere at the levels that we saw in 2018 and 2019. I think it's going to take a little bit more time to evolve there.
Fair to say that this is kind of like bouncing off, like a company bouncing off low earnings in, the summer of 2020. That some of that growth is reflective of, trough RevPAR and stuff like that. Fair enough?
I think that's fair. I think it's also, something of a factor of timing of the survey, which was, late July, early August. So, real estate people being optimistic, thinking about there being a vaccine, and the kinds of things that we've seen previously, as people get right back to wanting to, sort of travel, right? All the sort of pent-up demand, projecting forward, thinking that's going to be the case. But right, I think part of this is just the bar is low.
Yeah, and looking at that same chart that Manus is mentioning, it's interesting that data centers and actually office has the smallest percentage of respondents responding with positive rental expectations, rental growth expectations. Data centers are also only 29% of the respondents thought that there was going to be growth there. And maybe that's just because they're already very high. But the office one is interesting to me because we're always talking about retail and lodging, but then we think like the long tail effect on offices. And it seems like people were already thinking about that in their responses here.
One of the things that was pivotal in your report from my perspective was that I'd say more than half of the respondents felt that the pandemic exposed their shortcomings in the digital operation. What were some of the key gaps they identified, and what were some of the ways to shore up those gaps?
Yeah, it's a good question, Martha. I think the things that we're seeing are, primarily, and we focused in on their digital capabilities related to, offering a direct engagement with users of space, be it resident, shopper, actual occupant, patient, student. The ability to, sort of think through process automation, AI, data analytics. And I think what we saw, if you hone in on the last piece, sort of data analytics, in the early days of the pandemic, there was so much desire or drive for real-time analytics about what was happening. If you remember back, I remember having daily calls about, what at the end of the month about what people were seeing. And if there were any weaknesses in the quality of the data, the ability to cut the data, any questions about the accuracy or timeliness of data, it all got exposed then in a very big way. So I think what we saw from clients and what we've heard in discussions since last March is, it exposed things like not enough, expertise or muscles built around analytics and being able to do real-time analytics. And, it's interesting if you think back to the global financial crisis, the same thing happened with real estate investors in particular, sort of in exposures and concentrations. And it really highlighted where people were with respect to, having confidence in the data and their ability to do analytics. And then once things were fine, people have an awfully short memory. So it'll be interesting to see what happens when the pressure's off with respect to data analytics and capabilities around process automation and reporting. So if we have a short memory, if we have a long memory after March and April.
So let's stick on this topic for just a minute, that when you talk about, knowing what's happening in your property, knowing, utilization rates and so forth, would you say that's predominantly to figure out what sublet availability may be like or lease demand in the office space? Give us a sense of what people would use that data for if it had been better?
Yeah, so it's a good question, Matt. If you think about actually peeking into what's really happening in the space itself, so how many people are showing up, where they are moving around inside of it, really poking into office space, getting a sense of what sensor data tells you, gives you the ability to really understand the strength of a lease. Now, all that was sort of reset when people weren't going into the office anyway. But in a steady state, being able to sort of see into what's happening in a sort of on the right side of the creepy line, in an anonymized way, what sort of activity do I have? How does that compare to what it was last month or last year? Gives you a window into the health of an actual lease in an actual floor of an actual office space. But, what it lets you do is either react to it, so ask what's going on, to the occupant or the tenant, or plan for potential weakness in or a probability that the lease is going to get renewed.
Historically, the whole lease space has been crowd share, if you will, right? Give to get, the brokers giving data, getting things back, or sometimes it's polling of things in the cases of other parts of the market and so forth. Have you seen any flow of new technology thus far that could be game changing and could alter the way that either brokers or landlords, tenants, et cetera, see the market?
Yeah, I think the biggest changes or the investments that we've seen, and we saw this pre-pandemic, was sensor technology that is much more sophisticated and becoming a lot cheaper. So really having a look at where people are, where they concentrate, how they circulate, how they use space. I think that's something that we already saw changing and are likely to see continue to change. And the sort of sophistication around capturing that and doing something with it, sort of actually putting that data to work and getting insights from it and using that insight into decision making, I think is a relatively big deal. It'll be interesting to see when the market becomes sort of less opaque and less sort of storytelling about sort of the give-get that you talked about, for what's happening in the marketplace. And we saw, in the last decade, we've seen a lot of advancement in capturing leases, particularly office space leasing activity. So who's in the market? What are they looking at? How long does it take, from seeing a space to executing a space? What did they start looking at? What did they end up taking? There's a couple of platforms now. There's one predominant platform that captures that information and starting to see real insights come out of the data as opposed to, sort of storytelling and heuristics. And I think that's something that we're going to continue to see over the next decade.
Going back to the survey, I know Martha has some questions about, leasing appetite going forward, but a couple quick questions for you, Catherine, or you, John, either way. One is, did you see a big difference in confidence level, enthusiasm, bullishness, bearishness from one segment of the market to the other? Were brokers different from property owners, or property owners different from tenants? Did you see a lot of differentiation there? And separately, across geographies, did you see, a lot of difference in that area as well?
I don't know that our survey necessarily got into some of those specifics, but I would make a high-level general comment that, if you look at even the headlines in 2020 about the types of tenants that were expanding their real estate footprint, if you will, it was a lot of the big tech companies. And probably a trend that, again, had started pre-COVID and maybe perhaps somewhat accelerating into the pandemic and probably post-pandemic. Where we're seeing and where our survey highlighted some of this is more of your traditional occupiers of space in CBDs, professional service firms, financial service entities, banks, insurance companies, investment managers that occupy a lot of real estate, again, in central business districts, really evaluating their real estate footprint and their real estate needs now. I think our survey pointed out that over a third of these enterprises acknowledged they would be looking at their real estate footprint in the upcoming year.
Yeah, and Kathy, just to pick up on that, and we I'm guessing are hardly the first people to comment on this, but the longer the pandemic persists, or the longer it's an issue, the longer people are away from the office, the more I think it's causing both employees to think about what's the role of the office, and employers to do the same thing. So it seems, I think the general consensus is it's not just going to snap back to the way it was with people moving about the country. So really thinking about what the role of the office is, who needs to be in the office, why do they need to be in the office, how often should they be in the office. Just the longer it goes, the volume of the conversations that we're having, with big occupiers in our real estate and location strategy practice seems to go up about, what do we do? How do we think about this? How do we rationalize our portfolio? So that's interesting. And certainly, the shift of supply chains is made logistics real estate kind of the new it girl of real estate classes.
We've seen, and we've talked about on this podcast, the impact that having a digital experience with a tenant does to help the operation, right? Whether it's a retailer that can do online business or a landlord that can collect rent, they seem to fare better. Are you seeing your clients look for better ways to shore up their operation using a digital experience with their tenants?
Yeah, so I think there's sort of maybe two things there to unpack. One of them is the demand from sort of tenants or occupiers about having, a digital or touchless experience, and then the ability of owners or operators of space to meet that demand. So I think that is evolving sort of now, particularly in multifamily real estate, where it's not a sort of a theoretical thing, but how do you offer a digital or a more digital experience or engagement with residents? And there's some, I think, great case studies that, to be fair, some of them started before the pandemic, of offering digital transactions that you used to have to go into the leasing office for. And frankly, who wants to go into the leasing office from 9 to 5 to add a pet to the lease? Why couldn't that be done remotely? So some of those were happening. We're seeing people invest in electronic locks. So you can give sort of a one-time use to go look at an apartment instead of having somebody go let you in. So it's just examples of digital engagement that I think we're slow and are picking up for lots of good reasons.
I have a suggestion, John. So we have our office is 605th in Rockefeller Center, and I would have been much more appreciative of my landlord had they not made my face look so fat in the ID picture. So that might be something you want to add into your survey and say, like, maybe you could do some of those Zoom touch-up type things for your key card entries.
Or control your picture, right? So
exactly. Why do I have to? You know how hard it was to find the office to take that picture?
Right.
But I liked in the survey, it was something like the vast majority of respondents were saying that this, and Martha talked about it before, right, is that the pandemic revealed issues surrounding technology and digital transformation. Strongly agree was 56%, and somewhat agree was 26%. So, over 80% of respondents said, we were lacking coming into this pandemic, but less than 50% of them said that they have a digital transformation roadmap, right? So, which I understand, right? You're operating your business on a regular basis, and like a digital transformation or technology transformation is a lot of work. You have to have people like dedicated to it, and that's not always possible. But you said it before, do you see this as something that people are going to stay focused on, or is it just going to kind of fall by the wayside when we get back to quote unquote regular life? Yeah,
it's funny, Joe, right? How do you square that circle, right? So an overwhelming number of people said we're not there, we need to do something about this. And then if you get to the bottom, I forget what it was, a third maybe said that they were planning to increase spend. So I think part of that is a bit of sort of uncertainty or worry about revenues and expense, just a natural thing about revenues and expenses. So I get it. I think that was the reason for people not saying they were going to significantly increase spend. But so I think there is the conversations that we're having with clients, sort of interest in what digital transformation is or what digital maturity means to the organization. I think one of the healthy things, or at least I hope one of the healthy things to come out of this is real estate companies asking more questions about what digital maturity means. Where are they? Where should they be? How quickly should they get there? And having that really be a management conversation, or having that be elevated to a management team conversation, is something that we're seeing sort of hopeful signs of. As a committed optimist, I think will stick with us for a couple of years as people think about, what's it mean to be digitally transformed? And, real estate's just been, historically late to the game in investing in, their operations, and digital operations are no different from historically investing in technologies. But I think we're going to see, the industry understand more about what it means and commit to doing something about it.
Anytime I hear about people changing their way of thinking and upgrading things, I always know that there's a good way and a bad way, right? For me, the bad way is
You're still on the DOS prompt, man. Come on.
I'm still a DOS prompt, right? Right. The bad way is trying to do my own in-house plumbing, which I know not only will not come out well, but it'll usually lead to even more expenses like destroyed flooring and so forth. And there's the right way, which is, pay the guy to come in and fix your plumbing in the first place. So, what's a mistake somebody might make that would just be, I've spent a lot of money, I've taken this down the bad path, and I have nothing to show for it. You must have some idea about, bad practices in trying to, make this work.
Yeah, I mean, part of it is asking people to do it off the side of their desk. So, I've got whatever resources I have, and asking those resources to figure out what it means and do something about it. So, if it gets added on or tacked on to somebody's job, the odds of really making progress aren't great. And the other thing is making it, for the executive team, making it somebody else's job. The biggest success factor we see in any sort of transformation, particularly digital transformation, is when it is a management team sort of conversation conviction, when it's supported from the top, then it happens. And the other thing is, sort of the giving up when you have a, kind of a false negative, or when you have a bad experience, and not sort of having the organizational willpower to push through it. So I think those are a couple of things. And then I guess the final one is, thinking you've got to do it all yourself. I mean, there's real ROI in, a digitally transformed business. So sort of, buying into the ROI and using that to sort of accelerate through and get expertise or expert help to help you along the process. I'm right there with you, man. Don't make me do your electrical work. Bad things are going to happen.
So when you say improving ROI, is that by way of limiting expenses, getting better rents, or do you actually see them ultimately being able to sell their data to other third parties?
Yeah, and sorry, just to be clear, I mean ROI in terms of the actual work that it takes to do digital transformation. So, whatever it costs you to go through the transformation, generally there's a payback, and the payback is, eliminating. We're an industry that's rife with manual work, so eliminating a bunch of that manual work, or putting that work to a better use. Or higher value things that people are uniquely good at, exercising judgment, looking at sort of trends and ferreting out what they mean. The selling data is an interesting. Yeah, I'm not quite sure where that goes. Monetizing data, for individual companies probably isn't a big proposition, but for the big services companies that have true insight into data. Once it's in good shape, actually, putting that to work and getting insight from it is a pretty good prospect.
We've talked about office and the impact to office. Kathy, I know you've talked about this by profiling the types of companies and the kind of culture they have and how that impact their interest in going back to a more traditional office approach versus a more distributed and work from home approach. Give us a quick overview of what that looks like.
Sure. I think that is a conversation we're having with many at this point about what does returning to the workplace or returning to the office look like in our Thrive environment, if you will. And I think the answer, again, largely depends on your organization and your talent, your workforce. And there's a lot of things to consider, which I think considering some of these intangibles first becomes important, and then you can figure out the physical space that you need to operate in. And so in our Outlook, we've summarized 3 of these work frames, if you will, or work models. There's no one size fits all. There's no right or wrong model, but I'll quickly summarize those 3 models for the audience here. You mentioned the traditionalist. In the traditionalist model, we view these corporations thinking about their company culture, their workforce preferences, maybe how their workforce is comfortable. And we would see a traditionalist work model go back to the primary work mode being in a centralized location, completing most of your work activities and productivity from a central office or work location. There'd still likely be some remote work, there may be some flexibility compared to where it's been, but primarily going back to that office mode of work. If I contrast that, the other side of that is a model that we called visionary, where the primary mode of work would be done remotely. And there still likely would be a need, again, to meet and congregate, collaborate in some type of central work setting for some tasks or activities, but the primary mode would be done remotely. And then the third work plan or work model would be what we're calling it progressive, but it's really the hybrid model. And frankly, I think this is where most companies will end up compared to where they were pre-pandemic. I think there's been a lot of proof to suggest there's a lot of productivity and tasks that can be done effectively remotely, but there's likely still some things that can be done better collaboratively, some things that are important to organizations and how they develop, retain, and maintain their company culture. We're able to see and get together periodically to perform those tasks, to collaborate, to create that culture that creates that sense of belonging. And frankly, some tasks are just more productive, I think, done in person. More
You find yourself a lot trying to, reposition a firm that says we are really, really progressive, but you in your role saying you're not really progressive. You're a traditional firm, and you need people back in the office. Like that's what you do. Do you find a lot of that anecdotally?
Well, I think again, it goes back to maybe companies are evolving and changing. Maybe they've convinced themselves they do want to aspire to be a little bit different and adjust. And maybe it's even just the war on talent, right? To get the talent they need, they're going to have to build in some flexibility into their work plan going forward. So some of this is just being very realistic and looking at yourselves, to your point of what is your company culture? What makes you who you are? Again, assessing those intangibles, and then being realistic about the space that you may need on a go-forward basis.
Earlier in the call, we talked about your relocation business, the firm's relocation business. A lot of headlines lately with Oracle. In years past, it was, Schwab and AllianceBernstein, others that have moved from, real 24-hour cities or tech hubs, to Nashville or Austin or Plano, other places. Are you seeing an uptick in the amount of firms, is it 2x, 3x, 4x from where it's been in the past, compared to, in terms of people saying, maybe we should look at Austin, maybe we should look at Jacksonville, maybe we should look at Plano. How do you see the market at this point?
Well, there's certainly some evidence of some movement in that direction. And certainly some conversations and dialogue occurring in that regard. Whether that's 2x, 3x, 4x, I think time will tell how this evolves. But there's a lot of forces and considerations that go into that, even outside of just the pandemic implications. That again, it started even pre-pandemic, and I think we'll see some acceleration, coming out of this pandemic.
The interesting thing, Manis, is just it isn't all figured out yet. So, as people, a ton of people relocated, during over the last, 9-10 months. And the real question is, are they gonna stay where they went? And if so, do the employers need to follow them? And if they do, it lights up, Miami and Austin and Charlotte. So places where certainly there's an inventory of existing space, but in talking to investors, they're trying to figure out, do we, because there's so much demand for new kind of satellite offices in those cities, that there isn't the inventory to meet the demand. So are we going to start seeing people develop to meet that? And when do you know that it's permanent? So it's maybe we'll listen to this podcast in 2 years and think it's sort of so cute that we didn't know the answer to it, but really we just don't.
And give us the vibe at Deloitte. Where do you guys see yourselves going as an organization? I'd love to know what you guys are thinking. You're already, a global entity. You have offices everywhere, but is this, to use your image before, are you guys thinking about changing things up, or do you have some guy it's been bolted onto the side of his task list and he's going to try to figure out where Deloitte should be in 5 years?
Look, I think every organization is looking at their real estate footprint at this point. And by the way, organizations were examining this 10 years ago already, right? And again, so, the pandemic, I think, has been a little bit of an accelerator in how corporations need to utilize their space needs. I think it's complicated, especially as a global organization. Different regions of the world are viewing this differently. If you're in Asia Pacific, and John and I talked to our colleagues over there, they've been going back to the office for months and conducting business. So what we're experiencing here in the U.S. and perhaps Europe, Canada, other parts of the Americas probably looks and feels a little bit more like the U.S., where we're waiting to see and conducting surveys on how our people want to work, where they want to work, how our clients want to work. All that factors into what our real estate need to be going forward. But certainly we're looking at it, as I think a lot of organizations are. Globally. Personal
preference for either one of you guys? What would you like to see the organization do? Do you like the work from home?
John wants to be on the road.
Well, John and I are both road warriors. So, trying to take advantage a little bit of being at home, but at the end of the day, I'm a people person. I want to get back out there. I want to be meeting with my clients. I want to be meeting with my teams in person. I need some of that in my work routine, if you will.
Yeah, and Maz, just to amplify that, it is, certainly in the consulting work that we do, it's incredibly difficult when you get to these times of really needing to collaborate. When we used to sort of go to a room, lock ourselves in the room, and kind of argue with each other till we came out with the best solution for a client. It's possible over distance. It's just a lot harder. So we're finding that sort of creative work or collaborative work. In some ways, it can be great because it's a remote environment is a great equalizer. So, bringing people from a lot of geographies, it can be great. But in other ways, it's incredibly exhausting and takes a lot more time and is a lot more difficult to get to the same place. So to give you a long answer to a simple question, in some ways, I can't wait to as Joe said, get back on the road.
Well, Manis was giving me his wisdom many months ago about, when he used to get on the train to the city on Monday morning after wrestling with 5 kids over the weekend at home. And that was the respite. Work was the relaxation and respite time. And I can vouch that I'm getting to that place myself now, but I totally agree.
And you only have 2 kids, Joe.
I only have 2. I got to catch up. Kathy, I agree with, I feel like I might be getting a little duller, a little less sharp, a little less, on the ball, because every day when you're going into the office and you have to contend with and interact with people in real life, I think that keeps you, on the ball. It keeps you smart. It keeps you hungry. It keeps you sharp. And I think that is watered down by
I don't know. I think negotiating with a 2-year-old makes you
very sharp.
Yeah, exactly.
Very sharp.
Maybe it's just that I'm really tired.
Could be that.
But, there's also something about the energy of this. I used to live in Westchester, and I remember at this time of year coming back off of holiday break, taking Metro North into Grand Central, and sort of being swept up in the energy and energized by the vibe of Midtown Manhattan.
Yeah.
And there's something not just sort of, escaping the negotiating with the 2-year-old, but, sort of being in the energy of a city is really hard to replicate.
Yeah, absolutely.
One last question. Your report addresses, among many things we've already talked about, the threats around cybersecurity, and we already talked about the need to implement data-driven functions and analysis. That sounds like a lot to take on in the face of challenges that CRE operators and owners are already dealing with. So how do they do that, and where do they start?
Yeah, Martha, I think the cyber thing is very real now, particularly as there are so many people working remotely. So it's amplified the risks and the opportunities for bad actors to do bad acting. So I think that's a sort of a hygiene thing. I think to our client base, if they haven't done a cyber review recently, it's really time to do one, just as a basic business hygiene thing. So I don't think that is if you sort of think about where you've got spend that is that's optional. I don't think that's optional spend. And then when you go past that, I think organizations should really take a look at the manual processes that the pandemic, with people working remotely, has shown a light on. And not lose this time to sort of be reflective about where they have inefficiencies and really thinking about sort of the often false economy in the real estate space of throwing people at the problem. So I get that it's a lot to deal with, and I get that there's uncertainty certainly in some sectors about revenue and keeping expenses down, but I think this is a place where unless you're really worried about an existential threat going out of business, it's a great time to use the lessons and invest in the business.
Yeah, and I think I would add quickly, John, that as companies are assessing their digital capabilities and on their digital transformation journeys, you can't view cyber as an isolated item. You have to view it together as you're enhancing your data capabilities, your data analytics, investing in technologies. It just all should go hand in hand. It shouldn't be thought of as kind of the add-on. You have to think of it collectively in today's world.
We've talked a lot about your report today. How do our listeners get a hold of that if they want to read the primary source?
Yeah, certainly. It's available on Deloitte.com. You can go out there. You can look John or I up on LinkedIn. I have a link in my LinkedIn profile that you can access, and we can certainly make it available to all of you to share with your audiences as well.
And with that, we'll close this special podcast. Thanks to our guests from Deloitte, Kathy and John. Thanks to our producer, Haley Keene. Join us later this week as we look at what's happened during the week and how it may be impacting you. If you have a question, send us email at podcast@trepp.com. Please visit trepp.com for more info and subscribe to the podcast with your favorite provider. Thank you for listening and stay well.
All right.